Hello friends, welcome to our YouTube channel. As promised, I am preparing this video in English version now. Yesterday I recorded the Hindi version of the same video. So this is the small trick how to identify non-cyclical stocks for the investment based on the economic cycle. Okay, so we will study one fundamental trick based on the return on equities (ROE), and we will find how to select the stocks based on the ROE for the investment. Okay, so friends, this is the normal economic cycle. Okay, so in economic cycle there are phases that I mentioned on this slide already. So during the expansion phase, the companies will grow, the sales of the companies will grow, the demand is very high during this phase. Okay, so to cater the demand, lot of employer companies will also do expansion, or any extra companies will come to means satisfy the demand of the customers. Okay, so due to this phase, there is a lot of employment opportunities. Also, the company employees, existing employees salaries also increases. So every in this phase, everything is good. So that is why the stock market will also rise during this phase. Okay. So after this phase, there is another phase called as a peak. So during the peak, there is a saturation. Saturation will start coming during this phase. Okay. So the supply will start over exceeding the demand during this phase. Okay. So due to this, what will happen? The companies which expanded their production, they will start reducing their production. Okay. So as the supply exceeds the demand. Okay. So due to this, companies sales will go down, and the capacities will go down. Okay, during this phase. Okay, so the recession will start coming. Okay, so due to the recession, company employees salaries will decrease. Some employees may get uh, uh, terminated also from the employment, or like this. Okay, so during this phase, so this phase market normally stay sideways or go down. Okay, so after recession, companies take means countermeasures to cater supply and demand scenario. So during taking the countermeasures, thus the depression phase occurs and stock market again start tumbling. Then one phase came. So here again the demand start increasing and supply start reducing. So again this recovery phase will be there. And again, as I mentioned, the expansion phase, what will happen during the same thing will happen in this phase. Okay, so same cycle will repeat over the years, over the phase, years like 10 years or 15 years. So these cycles keep on repeating. Okay, so this is normal economic cycle. So during expansion, stock market will perform good. So during this phase, stock market will not perform good. Again, during this recovery and expansion, stock market will perform good. So due to this economic cycle, so companies profit and loss gets affected. Okay, especially due to this different type of phases. Okay, so due to this business cycle, the ROE, return on the equities of the companies, will start going up, coming down, going up, coming down, going up, coming down. Okay, so going up and coming down. So due to this, what happened? The profit of the company also, it goes up and come down. Okay. So if you see profit here coming down, then again going up, again coming down, again going up. Okay. Even the company maintain the constant revenue. Okay. Due to this business cycle. So everything happened due to this business cycle. So what happens uh, due to this uh, growing and shrinking ROEs? Okay. Normally in the stock market, the stock will perform like this. Okay, stock will go up, it will come down, it will go up, it will come down, it will go up, it will come down. Means over the year of like 10 years, you will, if you buy the stocks here, still the stock is here. So your return on the investment will be will not grow. Okay, will not grow. So that is why we have to avoid the companies which are cyclical in nature, means which depends on the business cycle. Okay, the companies which depend on the business cycle, we have to avoid investment in such companies. Okay, so how to identify such companies? Okay, so this is example of one of the non-cyclical stock. Non-cyclical stock means the company which is growing strong despite of this economic cycle. Okay, this company is always performing in every season, whether there is a recession, whether there is a depression, in every phase company is maintaining the ROE. Why companies maintaining the ROE? Maybe their product is like that only. People need that product, so they will buy the product in every phase. Okay, so that is why the ROE of the company is always constant. So whenever I am saying ROE of the company is always constant, that means over the period of 10 to 15 years ROE must be constant. Okay, and on higher side. Okay, so due to maintaining the ROE on higher side, if you see here company's profit is increasing. Okay, company's profit is increasing. So and revenue also start increasing because company always use the profit money for the uh, expansion of the business, and due to that this uh, revenue also start increasing. Okay, so and if we see the stock market performance of this means that non-cyclical stock, so it is like this. Okay, so price will always go up despite of the economic cycle happening around us. Okay, so friends, what is cyclical stock and what is non-cyclical stock? So I will explain it in very short. Cyclical stock is the stock that's price is affected by macroeconomic changes or systematic changes in overall economy. Okay, so stock price is affecting by the changes in economy, overall economy. Okay, cyclical stock known for the following cycles of the economy that already mentioned before: expansion, peak, recession, and recovery. Okay, so non-cyclical stock is the stock that beat the market regardless of the economic trend, even when there is a slowdown in the economy. So this is the perfect stock for the investment. Okay. So here, one thing to be noted that I highlighted here, ROE must be consistent over the years. Over the years means over the period of 10 or 15 years, if ROE is constant and on higher side, then that stock is considered as a non-cyclical stock, and that stock is very good for the investment. Okay, so we will understand what is ROE first. Okay, so I will quickly explain. Return on equity as shown here equal to net income divided by average shareholders equity. Okay, so what is the net income? So net income is calculated before dividend paid to the common shareholders and after dividend to the preferred shareholders and interest to the lenders. Okay, so this is called as a net income. And what is this shareholders equity? Shareholders equity nothing but the total asset of the company minus the liabilities, mainly the debt. Okay, so one more thing to be noted here: the companies which are taking more debt means the debt is higher. Okay, so the due to more debt also ROE comes higher. So we have to keep eye on the debt of the company. So why ROE will be more for the high debt company? Because of this formula: shareholders equity equal to total asset minus debt. Okay, so this will be small, means total asset is suppose 100. Okay, and debt is 80, so it will come as a 20 here. Okay, due to the small number here, the net means this is the division. Okay, so due to this division, the ROE will increase. Okay, so we have to keep eye on the company debt. We have to prefer the companies whose debt to equity ratio is decreasing over the year of over the period of like 10 years, or company must be debt free. So this thing should be noted. Okay, or choose the average ROE instead of the spot ROE. Means we have to choose. We are like in 2022, company reported 30% ROE, and in other years, company reported less. Okay, so do not choose the spot ROE. Choose the average ROE. Okay, so so what is the good ROE? Okay, so good ROE is ROE should be better than average ROE of Nifty 500 stock. So normally 14% is the normal average ROE. Okay. So any ROE above the 14% is considered as a good ROE. Okay. So any company reporting 14% ROE or more than 14% over the period of continuous 10 to 15 years, then that company is considered as a non-cyclical stock and it will perform good. Okay. So and less than 11% is considered as a poor ROE. Okay. Also, the ROE should be better than the peer group of companies. So, what is the peer group? Suppose the company is cement manufacturing company. Okay. So, let's take example of Ultratech Cement. So, Ultratech Cement ROE is 15%, and other cement are companies like Ambuja Cement, JK Cement. Uh, these companies ROE, let us say 13%, 12% or something like this. Okay. And Ultratech company's ROE is more than that. Then that company is considered as a good for the investment. So ROE above the average of Nifty 500 stock, and ROE should be better than the peer group of companies. Okay. So that company considered as a good company for the investment. Okay. So let us take some of the example of the non-cyclical stock based on the ROE. Yeah. Based on the ROE, your opinion may differ from me, but based on the ROE, so I am taking some examples uh, for these three stocks. So again, here there is a no recommendation for the buying or something like that. I am just explaining you for the this learning purpose. Okay. So we will see the Pidilite first. So this is the Pidilite. Okay. So if you see the Pidilite company ROE over the period of last 10 years, it is consistently above the 19%. Okay. Consistently above. Okay. So due to the maintaining the consistent ROE, the company's net profit is also growing over the years. Okay. And due to company's expansion or something, so the revenues of the company is also increasing. Okay. And this due to this performance, okay, the company stock is always increasing. Okay, there is no means correction in the stock. Stock is going sideways and then going up, sideways, then going up, sideways, then going up. Okay, so this is means we have to choose the stocks like this for the investment. Okay, so next stock is Asian Paint. Okay, so Asian Paint ROE also more than 24% over the period of more than 10 years. Okay, and company's profit is also growing consistently, and the revenue is also growing consistently. Okay, and due to this constant ROE, profit growing, revenue growing, see the stock performance. Okay, continuously going up, continuously over the period of like from 2004, from 10 20 rupees to more than 3000 rupees. Okay, so this type of stock called as a consistent compounder or the multibaggers. Okay, so we have to choose the stocks which will fulfill this criteria for the investment. Okay, so next company is Bajaj Finance. Bajaj Finance is also maintaining good ROE. Okay, so if I exclude this year, before that it is more than 15%, and profit is also growing and the revenue is also growing. Okay, and if I see the stock performance, okay, due to this fundamental performance, the stock performance is always stock is going up, going up, going up. The stock went from rupees 7 rupees to almost 7,000 rupees during this bull run. Okay, so so main purpose here is we have to find the fundamental companies which are maintaining ROEs more than the Nifty 500 stock or more than their peer group. Uh, okay, over the period of 10-15 years, and if the company looking good to us, means that companies are good for the investment. Okay, so if you like this video, please share with others for the sharing the knowledge purpose, and please subscribe our YouTube channel. We will means put many videos like this on our YouTube channel for the learning purposes. Thank you, friends. Thank you very much.